Simos, it has been, as the kids say, a hot minute since we've been able to get together, do a brunch. We did take the month of August off. We also wanted to enjoy the weather, but we know so many of you REC insiders wanted to take some time, get to the cottage, get to the boat, and just relax. And so hopefully you had an opportunity to do that, but we're finally back into doing our brunches. And today's I was about to say guest, but it's an extra special guest, a returning guest. Very hard to lock down because how busy he is and the organization he runs. We're letting you see his face and we're letting you see his name. We will give him an introduction. But Simos, I would be remiss if I didn't say I miss you, even though we run REC together. But you're in the West End in Mississauga. I'm in Toronto doing our thing. How have you been, brother?
I've been really good. Good morning to all of our REC insiders across Canada. Good morning, Jazz. Good morning, Michael. Today we have a very special show. By taking August off REC Brunch, a lot of things have happened in the real estate world. So I'm really looking forward to covering off some of the majors. It's been a very, very busy summer.
What are you talking about, Simos? There's been no news in the real estate market.
Yeah, nothing about interest rates, nothing at all. The way we invest, maybe it should just stay the same. We just do the same thing over and over, right?
Exactly, brother.
It's been listen. The summer was incredible from a weather-wise. I was able to, by taking some of our normal duties off, we were able to get up north for a bit. We were able to take some time with the kids and enjoy. So it's been a cool summer, and I'm really looking forward to, of course, getting a quick hello from Michael and getting on with this amazing show.
Well, guys, for everybody who's watching right now in the REC Nation, obviously, if you're live, you're going to have the ability to throw in a lot of questions in the comments section. But as always, just let us know, how was your summer? What have you been up to? Tyler's probably in the comments section. Big shout out to Tyler as he's been holding down the other segment that we do with Brunch with REC, where we actually bring on real investors, people that have maybe 42 doors, 420 doors. And then there's the people who are just getting started. And we feel like that's a great way for people who are wanting to learn more to actually hear it from them. But today, as I mentioned, Mr. Michael Sarracini, this gentleman has been speaking and educating and training hundreds upon hundreds of thousands. It's probably in the millions now. Now, I'm not exaggerating it, boys and girls. This guy has been in the real estate game for decades. He is by far leading the biggest real estate education team in Keyspire. A lot of you guys know Keyspire in the organization. But Michael, thank you so much for joining us today. And how have you been, brother?
Yeah, well, thank you for having me, guys. It's great to be able to hang and be live again. We the three of us chat, and Simeon, I think we chat almost weekly about real estate and what's going on and putting deals together. So it's great to be able to just hang out with everybody together with us. It's like we're hanging out. This is what we do, and everyone's here with us. So it's absolutely amazing. I got to thank you guys for taking care of all of our Keyspire clients. We hear nothing but good news for you and your over 50 agents now all around the place, your team members. So thank you guys for running an amazing organization, taking care of our people, taking care of your people. We don't hear enough good things. We can't hear too many good things about you. They just keep coming.
Our pleasure, man. Our pleasure.
Well, hey, guys, I'm not even sure if you guys know, but we're coming up to a decade in this relationship now, and time just flies by so quickly. We've been so fortunate to be one of Keyspire's service providers, and just being and speaking to so many of your students and helping them invest. That's awesome, and seeing the journey. I could think of people off the top of my head that like they were thinking of maybe investing. They got the education from you guys, and now they are one of the people who have 42 doors, right? And so it starts to take off. We think that real estate is the best drug in the world. Once you do it once, you get really addicted to it. Guys, you need to stay till the end because Michael brought gifts. He always does. Every single time we do something, either here like on a brunch or in person, he always brings the gifts. I gotta tell you, I did get a sneak peek for like 13 seconds.
It's amazing.
Before we got on air, and I know what he's gonna be giving away, like literally giving away to all of our REC insiders today. So I'm very excited about that. But guys, let's kind of dig into it a little bit. I mean, obviously, there's been some massive announcements as recent as this past week, and the one that I'm talking about is the increase from the Bank of Canada for interest rates, and it's 0.75%. Came in a little higher than I personally thought it was going to. I thought they were probably going to be closer to 0.5. I thought the easing and the tightening was actually doing what they intended to do with the last increase they did back in July. But Michael, like, what's your thoughts first, and then we'll kind of just round table this.
Yeah, absolutely. I have a question first though about our brunch. I don't have anything here to eat. I remember on one brunch, Simeon had like a professional charcuterie board and cheeses and grapes and exotic figs and but I haven't been on a brunch now for at least half a year. Am I supposed to? I didn't bring any food. Are we having brunch? Who's eating in the chat? Let's see the chat.
I mean, if we were on top of it, we would have had a brunch kit delivered to your door in
sent to you.
Fashion. But we're falling apart. We're just falling apart. So
hey, it's a kickoff of the, you got
so
that?
Now all my fruit is in the cup.
Nice.
Look at us, Michael. You can tell we're falling apart, brother.
Nice.
Look at us.
Yeah, you know what? I don't do breakfast, so this is great. I got my two favorite drinks and mugs here. I got my coffee. Real estate, it's a lifestyle. I remind myself every day. And I got my water in my other favorite mug.
Ready Fire Aim. Thank you.
So I'm going to be switching. I'm double fisting it here this morning.
So am I, brother. I got my REC cup, and I got a little cup that my kids made me. So that's the one I'm drinking water from today. I love it.
Nice.
I love the ILA brothers. It's the best thing.
So yeah, what's going on, man? This is crazy. This is like, I try not to play macro economist because there's nothing in the textbook that sees what the heck is going on right now. Even the economists don't really know. I think what's happened is the Bank of Canada, the Bank of Canada and the U.S. Federal Reserve, they control this monetary policy. The interest rates is what we're talking about. And I think they were a little late to the table. I think the rates should have gone up a couple meetings earlier. They should have anticipated this a little better. I think it was a bit of a gamble back in probably November 2021 to say, you know what, let's hope inflation doesn't pick up. But I don't see how inflation couldn't have picked up. To me, this is a matter of
Michael, that's exactly what you said is correct. November is when the market started going sideways, meaning that from November to February was the anomaly. Up to November, there was a healthy rise up, no doubt about it. But from November, right exactly when you said the Fed, that was the announcement that they should have taken a look and say, you cannot go on like this. It's exactly there because that was the period where things went haywire.
Yeah. So let's back it up there. Let's back it up to before November. But I totally agree. Before November, the real estate market was increasing, but everyone would ask me, this is like mid 2021, are we in a bubble? Is there going to be a crash? All of these buzzwords. And if we would have had this conversation last summer, I would have said, we're not in a bubble. We have prices driven by solid market economics. We have a supply and demand discrepancy that are driving prices. We've got population migration, massive population migration. We've got
bigger than ever.
Right. And with backlog from, the situation. So I totally agree. Up until about November, the market was going up the way it should have based on market fundamentals. But then it got a little out of control for a few month period there, and then started going up, and then started coming back down in March or maybe April or May of this year. Yeah, I think that November or the meeting before is when they should have started to raise interest rates. I was hoping they would raise interest rates. I'm like, please let my children be able to buy a house one day. Let's have things go up at a normal 2 to 5%, which I love. By the way, everyone watching knows leverage. If the real estate market goes up 2%, we all make 10% on our money because we've leveraged, right? We put 20% down. If you buy pre-construction, you've made more than that because of your deposit structure. So I'm happy with a 2% increase all day long. So if it corrects, if the market does correct down to a 2% or 5% increase, we're all very happy as real estate investors. We're doing really well.
I think a lot of people, like even in our community, thought as us being brokers, they're like, well, you guys must be loving this 21% year over year increase. And we kept on telling me, we're trying to scream from the rooftops, no, because our clients are in multiple offers on a property where there's 68 offers in a property. There's no inventory. So we're not even able to help as effectively as we are when you're seeing those increases of 5%. That's exactly where I like it to be, right around that 4 to 5% year over year compounding. It's that slow and steady, right? We all know who won the race, right? The tortoise won the race. It's not the 21%, because anything that goes up that high that quick generally has to come back down, right? Yeah. And so that's what we're starting to see now for sure. Simos. Yeah.
I just think, guys, people, like, if the government had intervened at exactly the time Michael was mentioning, November, not for woulda, coulda, houlda, like that, I'm not referring to nonsense and theories. What happened was you had a market going up steady. The fundamentals still have not changed. So what was in November, what was last year, and what is today, factually, we have an increased immigration quota of almost 30%. The plan was 340. The new quota for this year is 430, and they're on track. 430,000 new Canadians. And we're not talking about refugees. We're not talking about people from the war in the Ukraine. We're talking qualified, applied for, and cash-heavy immigrants that were accepted into Canada.
And Simos, just out of history, where do 50% of those people go? Because I just want you to make sure you make that point. Where do 50% of those people go? And then continue with your thought, brother.
50% go to Western Canada and 50% go to the GTA, not Eastern Canada. Because Montreal is chosen literally by 2 to 5% because of the French barrier. Not because it's not one of the most beautiful cities in this country, but they literally, because of the French barrier, all of Asia chooses the rest of Canada, because all of Asia teaches English. They're coming here with masters in English, and none of them know French. So Montreal loses that huge piece of the immigration pie only because of the French barrier. And there are some African countries, obviously, and a very few countries in Asia that do supply that French training, and that's who they get, especially kind of in the health field, doctors, etc. Going back to what I was saying, the fundamentals have not moved. They are actually getting exasperated more. Since the interest rate hike, and I'm spending an enormous amount of time looking at I'm going to say Ontario, because I've looked at Vancouver, I've looked at Calgary, but I haven't spent enough time to be able to say what I'm about to say. Over 9,000 doors at this point have been put on hold or canceled altogether in Ontario.
9,000 doors that were going to be built.
9,000 doors that were going to be built no longer make financial sense for the developer to put them together. The reason is very simply that the interest rate, the holding time, and the cost to procure the project no longer makes sense. They have to sell it for $2,000 a square foot, which in order to balance, you need $7 or $8 a foot for rental, which does not exist. You cannot ask somebody working for $3,000 a month to pay $4,500. It just simply so we are the supply, the demand, the workforce, and the economy are like this right now. Like there is absolutely no cohesive balance, and the fundamentals that drive a market up are still very much at play. So right now, we all have to pay very close attention. The government is asking us to curb spending to bring inflation down. I personally agree the utmost that this is the time to pay attention to slow spending immediately to make sure we're cash heavy, because anybody with cash in the next 6 months to a year is going to be a millionaire in the next 3 years. Anybody who has dry powder and can invest in real estate throughout this next 6 months to a year, opportunities are going to be insane.
Michael, you've seen this so many times, right? And I'm definitely not trying to aid you or anything, brother. But you've been involved in markets where you've seen the up and down. Like where and how can investors take advantage of compelling opportunities? Or maybe even before you answer that, sorry, Michael, like, is it true that markets like this present compelling buying opportunities?
Yeah, it's a great question. So let me share my 5 guiding principles right now in a market like this. I've been through this. I remember 2008 to 2010 was just an amazing time as a real estate investor because 95% of people ran the other way and all the money went to 5% of the people. And I was one of those 5% of the people. And so anyone watching here can be one of those 5% because we're in the same climate. Here's my guiding principles when it comes to a market like this. First one is uncertainty. Uncertainty creates opportunity. But right now we are in a time of massive uncertainty. Even the most professional economist is in a massive time of uncertainty right now. So that creates opportunity because when people are uncertain, when they're fearful, they do nothing. Stuff still has to get done. Properties still have to be purchased. People still have to rent properties. But when in normal times or good times, you might have 50% of the people take action and 50% of the people do nothing. So the wealth distributes from the 50 people that don't do anything to the 50 that do something. It's just makes sense. If you're going to work harder, the money goes to the people that are actually working and taking action. Well, in this climate, it's something like 90 or 95% in my experience. 95% of people do nothing. They're uncertain. They stop. They wait. 5% of people say, I'm going to keep going forward with my business. And I'll talk about what that is. And I have the people. I'm going to keep moving forward. So what happens is the do nothing money from the 95% of people shifts to the 5% of people. That wealth gets funneled and concentrated to a very small group of people. And I think I made some of the most money in my life when things were as bad as they could be or just coming out of as bad as they could be because like Simeon said, I set myself up, right? So you got to decide right now when you're watching, do you want to be the 95% that does nothing or the 5% that takes some sort of action? We'll talk about what that smart action is next. Take some sort of action so that the money comes to you. Because if you're the 95 that does nothing, your money's going to flow to somebody. That money moves. Money's always in motion. So, you want to know, you want to be on the receiving side, obviously. So that's number one is uncertainty creates opportunity. And we are in a very uncertain time right now.
I couldn't agree more.
I'll stop there. Yeah.
I couldn't agree more. And I want to make sure that I say this because it's so uncertain that people may misconstrue something. Smart action and action are two very different things. Meaning, based on data, based on experience, based on analysis, based on trust with power, with people that you've done business with, you can make decisions that will change your life.
Yeah.
What was happening from November to January was everybody thought they were an expert. Everybody thought that the market was untouchable. Everybody thought that free money is the norm. Money at 1% is not the norm. And whoever thinks so or was made to think so is delusional. That was the benefit of the pandemic. When the pandemic started, if you remember, the three of us were on a show just like this, saying that don't be scared of the pandemic. The pandemic will present opportunities. Well, a lot of us made a lot of money during the pandemic, like a lot.
Yeah.
When people were again scared, oh my God, what's happening? Is the world falling apart? Is the pandemic going to end it all? And we said, no, the pandemic is a temporary situation, but it will present opportunities because it affects people. And those who took smart action in the beginning of the pandemic are millionaires today. Those who take smart action, follow the rules, use the form and the template given to you. Not to bust the secret for the end of the show, but there's going to be some tools given. Use the tools that are given to you. That is how action is made.
So, Michael, I want you to go back to the other 4 points because you got me on. You got me kind of on a cliffhanger. I want to know what these four are as well.
Okay, yeah, and Simeon, you're absolutely right. I was just speaking with one of our workshop trainers, Stephen, and he said, "What the properties I bought in 2020, when everyone was fearful, nobody was buying, he said those properties went up $600,000-$700,000. In the last 4 months, they went down $100,000. Everyone's focusing on the $100,000 they went down. He said, I'm very happy in 18 months, net up $500,000 or $600,000. And so that's we got to adjust our time scale when we think about these things. Investment isn't a short-sighted time scale. It's over time. And so, yeah, number two goes along with number one is the group of haves and have-nots in an environment like this start to separate. All right. The oil and water separates, the cream and the milk separates. And the people that are the haves are that 5% that take action and do something and continue moving forward, whatever that means for them. It's smart moving forward, like you said, Simeon. And I call this, so, when the market's going up, we're all brilliant. We're all geniuses. Anyone can make money in real estate. You don't really have to try that much, and everyone makes money. But when the market goes down, that's when you have to be really clever. And I find that when the market, I call this the ER zone, when the market's in from the peak down and it's sliding and ready to come back up, because people think they're in the emergency room. But no, for me, this is the education and relationship zone. So it's not buying a property, you still move forward. You get educated. You show up every Saturday to something like this, to Brunch with REC. You show up to every Keyspire broadcast. You get educated, and then relationships. You spend the time building the relationships. I remember there was a time around 2005, 2006 in my business where I just couldn't buy properties anymore. It was too expensive, and the ratios didn't work with the rents. So I spent every minute that I would have buying or acquiring properties, I spent it joining the city councils, joining local charity groups and community groups, getting out there with the community, building relationships. And guess what happened as soon as the market turned around, which it does. It has since the beginning of time, since castles were built. As soon as the market turned around, I was ready to capitalize on the situation. I was ready to make a ton of money in real estate by helping people because I had built the relationships in the ER zone. So that wasn't even a point, but that wasn't even one of my guiding principles.
Love that. That's a new one. That's a new one. That's a new one there. I haven't heard you talk about the ER zone. And it's so important, right? Because I have a feeling all those relationships and connections you made with the guys and gals at the city council, the power team that you built, you were ready to now take action once that market started to go up. And here's the other, I'm sure, massive byproduct that came out of that. They actually probably presented you with properties. Like, hey, Michael, something came up. I heard about the property down the street. Did you want to get involved in that? Like, all those type of actual practical things start to happen when you have good relationships.
Yeah, it's business is relationship built. So if you're not buying property for a year, that's fine. Go out and build all the relationships you need. And one of the tools in this starter kit that I'm going to give away today shows people exactly how to build that team so that you could get started right away, right when we get off this call. And if you're watching this recording, you get started right away with these tools. So number one was uncertainty creates opportunity. Look for uncertain times and uncertain markets because that's where the opportunity is created. And we're in one of those uncertain times right now. Number two, there's going to be a redistribution of wealth. It started about, 12, 18 months ago. It's going to continue for the next 18 to 24 months. And the people that, there's going to be a lot of people, 5% of the people are going to come out the other end with a lot more wealth than when they started. And 95% will be either neutral or a little bit less, so in the 5%. Number three, right now in the ER zone, there's a much lower margin of error. So we talked about how when the market goes up, everybody makes money. The margin of error is huge. You could kind of screw up and, all the rising tides will lift all boats. In this time, you got to be dead on with your numbers, dead on with your analysis, with your due diligence, and with your decision-making process. Because the margin of error is smaller if you're out buying properties today. Excuse me. It doesn't mean you can't buy properties. You just have to do it right. You have to be educated. You have to have the right team and the right,
Yeah. I mean, in terms of what, you also said working the numbers as well. Make sure that you put in your vacancy rates. Make sure that you put in the repairs and the maintenance. So to your point, I'm sure you're going to go there next, Michael.
Getting so excited here.
I love it. It's been a while, and all of us are excited to finally get together. We're actually super excited. Michael and I were speaking a little off air, again, really quickly about the in-person event that's going to be happening for Keyspire students. And I mean, there's, this is going to be a little over 1,300 people, and we'll talk about how you can get involved in the future with Keyspire as well. Michael, how's your throat doing, buddy?
All right, I think I'm losing my voice here. So excited.
See, this is what happens. This is what happens when you get into a room with myself and Simos. One of us always is yelling and screaming, and we lose our voices. We're actually heading to Winnipeg in the coming week, so I'm being very careful, drinking a lot of hot water and lemon.
So the fourth one is inventory being in such short supply. So that's a fourth. It goes along with having the right team to find the right properties and doing the right due diligence. But with inventory in short supply, it's harder to find the right properties. And so you got to be ready to move on them. To your point, Simeon, to have the cash or the resources to move on them because they're going to be snatched up really quickly. And so on a side note, Simeon, I don't necessarily agree with you to have cash stockpiled, because right now, the only GIC I can give you, guaranteed investment, is cash, and it's negative 7%.
Yeah, but so I wasn't. Hey, it wasn't. Let me be very clear. I'm talking about liquidity, not cash. I believe zero in cash. Cash is like literally nothing.
Yeah. Good. Yes. Access to capital. People that have access to capital right now through liquidity, through if you can get a line of credit approved for it, get it. Have your access to capital. So inventory is low, and I hear this from our coaches. We have 15 coaches throughout Canada and the U.S. They live all across Canada and the U.S., not just in one city or one area. And this is consistent that inventory across North America is low. There's still inventory, but the top 5% that I talked about are those that are going to be acquiring it and those that are going to be making money off of it. So number 4 is inventory. And I want to give you a little model that I learned from the animal kingdom about how I run business in general, but how investors watching can manage low inventory. So in the animal kingdom, you have 4 real categories of animals. You've got predators, parasites, competitors, and then collaborators. Call it symbiosis or symbiotic relationships. So the lowest of the low will be the predator in the real estate investment world. In the animal kingdom, it has to happen. The lion has to eat the gazelle. But there are predators in the real estate world that'll go out. They just want to crush. They just want to take. They're predators. They're just eating. They're not giving. They're just taking. To me, that's the bottom. That's the bottom of the barrel. The next is parasites. They don't kill their hosts. They just take a little bit that's not theirs and they never give back. So predators take it all.
That's one of my favorite words of all time.
Which one?
When Simeon gets upset, he drops the parasite word. It's just the word itself. It's so fulfilling to say it.
It's pretty offensive too, calling someone a parasite.
Right. I drop it when very necessary, and I've dropped that before. Anyways,
I watch out for these people. I watch out for these people in real estate investing and business in general because they exist. So you've got the predator, then you got the parasite, and then you could graduate up to the competitor. So in the animal kingdom, there's animals that compete for resources, food, shelter, mates, the things that we need. We need to, in the animal kingdom, eat, sleep, make babies. That's what all the animals want to do. So they're competing for those resources. So you've got competitor. And that's where most real estate investors are sitting today. I don't think a lot have the goal to be a predator or a parasite. Sometimes it just happens by nature. Most people sit in the competitor world. And so that's where you get into trouble in a market like this. If you stay in the competitor world and you don't graduate to the next level, and graduating is just a mindset. There's not a lot you have to do differently, but graduating up to the next C, which is collaborator. This is a symbiotic relationship in the animal kingdom. It's like humans and our gut bacteria. We need them to survive, and they need us to survive. We both give and take equally. And so when you can move in this market from competitor to collaborator, all of a sudden the doors open up to you. And one example with inventory is instead of competing with two other people for an inventory or a property, how about you were a collaborator and you had a joint venture partnership and you purchased the property together. So now you're not bidding it up. You're coming in together and you're making a very smart offer. You get the property for tens of thousands of dollars less because you're not competing, and you get a third of the property with a third of the resources, a third of the risk. So that's what I want to say about point number 4 is in a market like this where inventory is low, graduate along the PC scale and try to get yourself from competitor to collaborator.
Mm-hmm.
I'm so proud to hear a friend and collaborator of a decade, literally by chance, because this is not a rehearse show, be at the same place. Like Jazz and I live, like I've built an entire programming course based on collaboration. The word collaboration to me has already translated not into just a better psyche and a better place to work every day. And I'm talking about the real estate broker world. That is, if you were to ask anyone, oh, it's cutthroat out there, it's dog eat dog. If you want it to be, it can be that. Or it can be, hi, best friend. Hello, collaborator. Why don't we go out there and make the world a better place today? And literally, Jazz, we have done hundreds of deals in the last 2 years with people who used to look at us like competition.
Well,
and
look,
we said, stop it. Don't even look at me that way. You don't understand. And then they split. They turned.
To your point about, the relationship we have with Michael and the rest of the organization. I mean, back in 2019, late 2019, early 2020, there's tons of videos of us saying, it's so funny, the 4 points and the last 2 that Michael said, because what we were saying collaboration over competition, and tons of videos. And I mean, it's why we've been able to take, in my opinion, this relationship to the next level. I mean, we're, to what you said, Simos, when people are talking about, it's a dog world and it's so cutthroat, your brain will always find what you're looking for. Right? Yeah. Michael said it as well. Going from competition to collaboration is 99.9% a mindset thing.
100%.
You can find the good in everything, and you can find the bad in anything. It's a matter of what you want to get, focused on. So, Michael, continue to your 5th point, buddy.
Yeah, and I maybe I'll give everyone just one method on how you can get from competitor to collaborator. And it all has to do with identifying your unique ability, your unique resource that you bring to the deal. So when you're bringing something to a real estate investing deal, what do you bring? I have a tool called competitor to collaborator. I've actually run our relationship through it, every relationship I have. So what I do is identify the unique value I bring and the unique value I do not bring. And I don't look for people with the same value I bring. I look for people with a different value. And that, to me, creates a great collaboration. So, for example, Keyspire and REC. Keyspire, we provide private coaching services for our clients. REC, you provide an amazing team that finds properties and gives analysis on what people need. I'm not starting a brokerage to build a team to go and do that. And you're not starting a private coaching company to coach people through a system developed over 10 years. So we are perfect collaborators for the things that we do. And so that's what I would suggest or recommend to everyone. Find what your unique value add, what your resources that you bring, and find people that don't have that, right?
And I love what you said, because sometimes even when people are going into a joint venture deal, it's like, look, I'm gonna find the property, and I want 50% of the deal, to not necessarily even just find the property, but to manage the property. I'll be the property manager, and I want 50% of the deal. I always chuckle because I'm like, well, I can kind of get, a property manager probably anywhere from 8 to 10 or 8 to 12%, right? So what is your value prop, and actually describing it, putting it on paper. I think people are getting a sense, if you've never heard Michael speak, Michael has a science background, hence why he's able to go through in his head his points, and it's very, very clarified and in detail. And I have a feeling that's where it comes from, Michael. But, if you're going to be bringing a deal to someone like Michael, to Simos, to myself, to other investors, make sure that you speak about your unique proposition. Like, what are you actually bringing to the table? And then understand that you might talk to 16 people, and they're like, look, I might be one of them, and it might not suit me to become your joint venture partner, but you got to just keep going. It's going to maybe happen on the 17th or the 37th person that you speak to. You gotta persevere, and you gotta be consistent.
Yeah, it's great. And real estate investment is critical. I'm curious to see in the chat, does anyone have identified their unique value add, their unique ability, their unique resource? I'd love to see some of the uniqueness we have just with this group of hundreds of people we have here today. Once you identify your uniqueness, things become very clear for where you add value to a deal.
And so before you get to the next point, Michael, Nikki, who's in the back, Stephen Rochester's on vacation. So big shout out to Nikki for controlling the ones and twos in the back. Nikki, when people are commenting or if they have questions, just bring them up onto the screen so everyone can see them, and then we'll get to them a little later. But I would love to see people's answers to Michael's question as well.
Great. Yeah, Maris. Thank you, Maris. That's great. I'm seeing them come in. Join Keyspire, being great, very helpful to learn. I found REC amazing, Maris. Yeah, this is what we do at Keyspire. We do unique tools, unique coaching, unique systems. And so this is, as they come up, I'm going to give you my fifth and final point, which is the mindset that to simplify the idea of decision-making and how to make decisions, it's not so much about what decision you make, it's your decision-making process that is important. So how you make decisions. Most of us jump to what the decision is. Should I buy the property? Should I get in the relationship? Should I start this business deal? But to me, I take it a step back. It's how do you make the decision? What's the decision-making process? So I've already talked about, the tools. Like if I'm going to make a decision on collaborating with someone, I'm going to run it through my process. I'm going to identify my uniques, their uniques. I have a process where I match them, and I see if they match or they don't. To me, that's more important than the decision, because the quality of the output will only be related to the quality of the process that I put them through. And so that's my number 5 is your decision. You have to have a decision-making process when you're investing. What is a lot of people call it, there's a due diligence is a part of it, but that's not all. There's more. There's what is the minimum ROI you're going to accept? Everyone should know the minimum ROI, because you don't know if a property is good or not unless you know the minimum that you're willing to accept for a property. So number 4 is have a decision-making process, focus on that versus the end decision, because the end decision quality will come from the process that you put the decision through.
Yeah, I love what you said about, what's going to be the minimum ROI. I mean, I always tell people when we're meeting with them that when somebody's bringing you a deal, I also want you to make sure that you ask them, what are the risks involved? Because if someone says that there's no risks, like zero risk, I would tell you to run away. Way before the 6 foot, what was it? 6 feet away or 3 feet away where we had the distance and stuff like that. Like run away from that person, because there's always things that you need to consider with every single investment in real estate. Are some more passive, or is there more history in a certain location? Yes, and yes, for sure there is. But there's a risk involved in every single type of investment. And if they say to you, it's zero risk, this is guaranteed, you're gonna do this and all, like, no. I think the only guarantee in real estate is the fact that values will go up and values will go down, but then they'll come back up again. I think that's the only guarantee that I'm comfortable ever saying, but you better understand as an investor, and you need to find out what those risks are. And then does that match your, for lack of a better word, stomach for that type of investment?
I love the commentary, and there's comments just pouring in. Angie Baker was a real estate agent and looking to bring you her unique value proposition. And good for you, Angie. You're a sister in the business, and we wish you well. Keep educating yourself, keep showing up, keep putting the work in, and you and your clients, your future you and all your clients will thank you for it. I saw iGen, who is an amazing multi-transactional client of ours. God bless you, iGen, and happy you're getting through all your processes. George's hello, due diligence and analyzing. Keep up the good work. Always.
I'm seeing some new names today. I'm seeing a lot of new names. This is what happens. You know what I did, a couple of days ago? The team was putting the graphic together, and they put your head really big, Seamless. I was like, first of all, let's like his head's already big. We don't need to graphically design it. I was like, just do me a favor. Can we just put Michael's face on it? And this is what happens when you put Michael's face on it. You get rid of the not so good looking Indian guy, and definitely not the Greek guy on it. You put Michael on it. Well, it's just the truth.
You've lost every poll we've ever had.
Right. Look at
You've
these.
lost every poll we've ever had. Factual.
I'm a general contractor and realtor in Calgary, where I was born and raised and have lived most of my life. That brings hope value for investors from out of town, province, country. I mean, awesome. Like, just great comments. Keep them coming, Nikki. You're doing an awesome job in the back, buddy.
Yeah, this is great. Yeah, I want to comment. Like, George is a great example. George Hanna that we were just had up. Due diligence and analyzing deals is his unique that he brings. So I love this because that's going to be in your unique column. And when you go find somebody to collaborate with, the last person you want to find is somebody that is good at due diligence and analyzing deals, because you're both going to be good at one thing. Who's doing the rest of it? Who's doing the acquisition, seeing and finding the opportunity? That's Nadine. I see Nadine Russell here. I'm going to do the acquisition, right? So now you can see that all the things needed to make a deal, instead of both of you fighting over a property and bidding it up, if you can find each other, if you have a community to find each other, you can connect and you can collaborate. You get a better price on the property, and you're going to have a better result because you're bringing unique skills that are needed. So this is great. We have all the raw materials right here. Right?
And this is what practically happens when you go to investor meetups. But guys, you're doing this digitally. It's a Saturday, beautiful Saturday a morning here in the GTA. Anyways, get in touch with each other. This is why we went live on YouTube, because we want you guys to connect with each other. And then if you want to have a second set of eyes on a deal that you're looking at, throw that at us. You just have to send a quick email to info@reccanada.com. That's info@reccanada.com. Even if you're working with someone else, we would love for you to work with us. But if you're working with someone else, that's okay. I mean, you can tell that both Simos and I like pies. We know that the pie is big enough. The business will come back to us. You want a second set of eyes, hit us up, let us know. Tax specialists, Angie and Jamie. Just loving these new names that are coming up right now. So if you're not part of our if you're not an REC insider, you've heard us say that a couple of times. That's essentially our community. That's how we stay in touch with you. We let you know about exclusive content, exclusive opportunities when events like this are happening. Hopefully we'll start to move to in-person very, very soon, hopefully by the new year. And that's how you stay in touch with us. Just send us an email at info@reccanada.com and to make sure that you're getting our emails.
And of course, mutually with Michael's organization, with Keyspire, we do a lot of joint events, whether they're virtual or in person. Obviously, at the end of this month, we have his flagship event and biggest event of the year in the investment world in this country anyways, is the Investor Summit. That's in person. But
we're so excited. In person, finally, after 2 years. Over 1,300 people we've got coming. All of our coaching clients will be there. It's exclusive to our coaching clients, so 1,300 people around North America.
I can't wait. I honestly can't wait for anybody in this audience who wonders how that goes down, what the cost is, what the gain is, what will I learn there, what will I not learn there. you should shoot us an email. We can put you in touch with Michael's team because these events literally generate hundreds of millions of dollars of transactions. People go there and actually do. There's a difference between the talkers and the doers.
Well, one of my favorite
Right
things
now-
in that.
Right now, we're doing the talking. By the end of this month, we'll be doing the walking, and we're going to be doing it together. So
And
for
that's-
anybody interested, please shoot us up.
One of my favorite parts, and I mean, I think this is number 24 flagship investor summit that we're going to be part of. But I think my favorite part is when Michael comes to stage and he has the number of transactions and the volume that people took action on that weekend. It's mind blowing how many action takers there are. But Michael, you have a free gift that I think is, without exaggerating it, like I said, I did get a sneak peek on it. This startup kit. And it couldn't have been timed. Like I couldn't have scripted this better. Somebody just wrote in the comments, "I'm a new investor. Thank you so much, guys, for sharing so much knowledge." And someone like that is definitely in the need of this startup kit. But everyone who's been investing for if you're a veteran at it, maybe you need to go back to some of the basics that Michael's going to be speaking about as well. Can you please talk about this gift that you're offering to all of our REC insiders today?
Yes, absolutely. And this is actually new. You're the first people seeing outside of my team. So one of the unique abilities I have is I can take something complex and I can boil it down to what we call a game changer one pager. That's what we do at KeySpire. We have over 100 tools like this. And I wanted to share this one. This is for our clients, but I wanted to share it with your insider community and all the KeySpire clients that I see recognize the names here in the chat. Because let's go back just for 10 seconds that even though we're talking about how great real estate is and how things are moving in the right direction, don't forget, if you don't do it right, you're at risk. Your risk increases based on your activity. And I always tell people it's not a risky property, it's a risky investor, right? I've seen properties that were terrible properties with some people, and I can come in and I can turn it around because I put a different process in, or a KeySpire client, or somebody that has a marketing or management or analysis process, decision-making process. So I want to just caution everyone, don't just go out there and buy property after this. Don't go on the MLS and find something and buy it. What I'm going to give you is will become part of your decision-making process. So you make good decisions, and the quality of the output, your results, will be directed by this process. And so that's why I wanted to bring this. What I've got here is our KeySpire starter kit, and in a minute we'll put in the. I don't want to put it in the chat yet where to get it because you're all gonna leave. I have to explain it to you first. I can do this in just a couple minutes here.
We have over 500 people between Facebook and YouTube that I know are watching. A lot of people are going to get a lot of great value from this. There's over 300 people on YouTube right now. So everybody pay close attention. This is not gimmicky nonsense. This is real tools that you can implement tomorrow morning. So please pay close attention. Michael, give it to us, man.
Yeah. So here's what we've put together. We've put 7 resources in this starter kit. And I worked with my team and the coaches to say, what are the 7 resources that we can give somebody right now without overwhelming them? We have hundreds of these, so we're not going to put hundreds in, so that somebody can get started right away in this ER zone, this education and relationship zone. So what we've included is the special report that Scott and I wrote on OPM and profitable partnerships, other people's money and profitable partnerships, collaborations. So it's an 18-page guide on how you can get started right away with other people's money and these collaborations. That will be in this starter kit. We've got the team builder guidebook and a team builder tool. So you can leave right away and start filling in the relationships, the right relationships. There's going to be one for realtor. You'll see, you're going to put REC in that. You don't have to worry about that. And you're going to do the real estate action plan with REC. But then we give you all of the other team members you have to build and how to build them with the guidebook. So that'll be in there so you can build your team immediately. And then we have the guidebook, and then we have the actual tool where you can fill it in. And then we have my new favorite tool that I use on every property. I've done this for 22 years, but I just finally put it into a one-pager, is the ROI scorecard, return on investment scorecard. Now, the reason this is important, I'm going to show it to you right now. The reason this is important is because I find that when people calculate ROI, they say, so then what? Okay, here's the ROI. At Keysbar, we do the 4 ways to win. When they calculate it, our clients say, well, then what do I do with this? Is this a good number? Is this not a good number? So the scorecard allows you to score the ROI. You can score the ROI based on a proven score chart to tell you what you should do with the property. We're taking something subjective and we're making it objective. And so I want everyone to have this ROI scorecard. It's a 1-pager. And I will say, do not buy a property or even move forward with its extensive due diligence until you do this 1-pager. All right, I'm going to hold it up right here. Here's the ROI scorecard, the 1-pager. So the way it works, and I'm going to show you a filled out one in a second. You have the 4 ways to win. I'm going to get the right side. 4 ways to win along here. You're going to calculate your cash flow, your principal recapture, your active appreciation, your passive appreciation. And then those all flow into these boxes here. So you have 4 numbers: cash flow, principal recapture, active appreciation, and passive appreciation. You add those all up, and that goes to this box here. You just follow the flow chart. That's your profit for year 1. You're going to divide that by how much money you put into the deal, your cash invested. You multiply that number by 100, and that is your ROI. That's your year 1 ROI. So this is where most people stop. They say, well, okay, here's my year 1 ROI. So what do I do with that? What we've done is we've said, well, decide what your minimum ROI is. And you're going to divide your year 1 by your minimum, goes up into our blue box, and that gives you your ROI score right there. So that's how this tool works. It takes just under 5 minutes to do. It's very simple math, but it is critical in your decision-making process to get good results. The ROI scorecards, you're going to get that both in a digital form and a printable form. With the starter kit's free, by the way. I'm not selling anything. I'm just trying to explain it. So
Exactly.
Makes sense,
Thanks
right?
for mentioning that. And I thought
it's
I
free.
did, but maybe I missed it. I apologize. Yeah.
Yeah, it's all free.
No,
It's for
we have
you
nothing
guys.
to sell you guys today.
No.
We have nothing to sell you. Yeah.
This is the guide. So this explains how to use it. And down here, you have the scale of what to do with your number, your blue box number. So you're going to get the guide. So that will explain what to do. And I filled one out so you can see how powerful this is. So this is a property that's $1 million. We're going to put $200,000 down, and we're going to see what the ROI score is. We're going to see, should we buy this property or not? So here's how it works. I put in the cash flow numbers. So this property cash flow is fictitious property. Cash was $100 a month. So I put $1,200. The principal recapture, which is how much the mortgage gets paid down, is about $5,100 a year. Let's say it's a turnkey property that you get from REC, and there's no renovations that have to be done. And let's say the passive appreciation is 3%. Jazz, you said you like 4 or 5. So do I. Let's be conservative and say 3%. That's $30,000 on $1 million. So we add those up, and they go to the next box, $36,300. We've invested $200,000. That was our down payment. Might be a little bit more with some closing costs. You're going to put your actual number in there. To keep the math easy, we divide the profit year 1 divided by cash invested, and we got a very clear return on investment, 18.2%. Now, for this example, I said for this investor, we want a minimum 15% return. Anyone in the stock market would just love a 15% return. So minimum 15. Some people has 20 or 25 or 12. That's a personal number to you. So if the return is 15% and we're doing 18.2, we divide one over the other, and our ROI score is the number we make our decision on, 1.21. That is our score. So in the guide, you pull up your scorecard, your scale, and 1.21, the instructions are, this is a great find, great score. Move forward with this property, proceed with due diligence. It doesn't say buy it. Now you can proceed with due diligence, because if this property was a 0.49, our advice is stay away. It doesn't even give you half of the return you're looking for. So stay away from the property. So this is for beginners, for starting out. This is just an easy way for, in 5 minutes or less, you can score the ROI of any property you're looking at, and then you know if this property makes sense to move forward due diligence. So I'm going to stop there. These are the tools that you're going to get in addition to the profitable partnerships and OPM report that Scott and I wrote, in addition to the team building exercise.
Okay,
Yes.
guys, we're gonna let you know.
I don't think it's for beginners. By the way, I think
Good point, Simeon.
every single person, every single time, should take that quick moment. I don't give a S how many times you've done it before. I can tell you that myself personally, I know as a fact Jazz and Michael, because we've been on due diligence calls hundreds of times together for our own investments. I will tell you that it's worth the exercise. It's worth those 5 minutes of focus time to just refresh, look at the numbers. Did I miss something? Is this the score that makes me happy? Am I making an emotional decision, or is this part of my plan over here, which should be your goals, your written words, your affirmations, all the things that you're trying to achieve? So taking the exercise, there's a reason every Sunday Jazz and I go down our list of things that we need to do for the week. Write them down. It's not because we don't know what we're going to do on Monday. It's because you're putting focused effort and time. This is a great exercise. Michael, thank you for your generosity in sharing your intellectual property with our audience.
I can't tell you how many times in the 17 years that we've been doing this, probably for the first, I'm going to say 5 to 6 years, majority of our business was working with first-time home buyers, what we call smart buyers and smart sizing buyers, moving up into bigger properties, moving down to smaller properties. And they've done it 4, 5, 7 times, but until they actually had some type of system and or checklist, they didn't realize how much they didn't know. And so even if you're in the process of investing into your 14th property right now, I can tell you, Michael and the team have made this really easy, because I didn't see the second part of the gift of the starter kit, and so I didn't get a sneak peek at that. So even that, just to make it easy, like, oh, okay, it's less than, if it's 0.4%, stay away from the property. Good, it's not even going to match. Like, you're taking a lot of the thinking out, and so that is huge. Nikki, I'm going to ask you, brother, to put in the link for everyone right now to download this starter kit. Oh, Nikki, you're so fast, brother, because you didn't even let me say it yet. It's keyspire.com / you got to get the / in there, REC, keyspire.com / REC to get, and you're going to be the first people, because I know Michael was like super excited to bring this to our community today, and Simos already thanked you, but I want to thank you again, Michael, for allowing our guys and gals to get access to this, because you guys have a massive organization, and you could have easily kept this to yourself, but obviously you're living in collaboration by giving away so much access to our guys and gals today.
Yeah, no, it's my pleasure. I know people need something to get started. I don't want people to make the wrong decisions. I feel like I have a responsibility to not only get people excited about real estate, but allow them to do it smartly. Because if I get everyone excited and just leave and don't give them any sort of decision-making process or tools, then I could actually do more harm than good. So here we are with the tools. Like Simeon said, this is for everybody. I still use this 22 years in. I use this for every property. This is the go-to tool you do with every single property.
And you know what I love about this too, because where you're at your level in terms of your portfolio, you also have a team that's looking at properties for you. And so to the person who has now 58 doors and 100 doors, this is a very scalable template that you now can give to your team and say, can you do me a favor, please? Can you only bring me the properties that are getting me 15% and higher? Like, don't even bring me anything less to the table, because it's just a waste of time. Why are we even having a conversation? And so I'm huge on that. Like, people know I don't have a laptop. I do everything from my phone. And so I have to figure out ways to have other like a lot of stuff delegated. And so now you can delegate this to someone else. They only bring you the cream of the crop properties. And so that's where I'm going to be able to take this now.
Remember, decision-making process. That was my point number 5. This is exactly what happens here. You need a process in order to get to the right end decision. It's got to be simple. If it's a complicated process, forget it. I only deal in terms of one-pagers. If it's on more than one page, I don't want it. It takes too long. It's too complex, and it's going to be the killer. So,
and I know how much you believe in that, because you were probably the first organization to ever come out with a one-pager for a performer. Like, easy, simple. Like, I know, like, we know this shit. You know what I mean? Like, we know, like you guys came out with that one-page performer. the 4 ways to win, that in my opinion changed it for investors because it made it easy. I mean, sometimes Simos, I mean, he's more in the commercial world than I am, but he'll bring a performer like this thick. You know, and it's like, Simos, I don't know what you're like, dude, can you just tell me, like, or we're investing it with each other, let alone someone who's like never seen that type of performer. Your one-pager stuff is unbelievable because it just makes it easy. And look, I mean, for someone like myself, I need things in layman's terms, right? And I think majority, I can speak about our community at REC, they're like, they don't want all the big ass words. They want to make it easy for me. Let me understand it.
And real people. It's real people doing real deals, bro.
Yeah,
so
sure.
people don't need big words and bullshit. Like that's the whole point. I think if we've done one thing and one thing really well, that's keeping this specific show, Brunch with REC, and all our events before that bullshit free. Meaning the one thing we don't do is talk nonsense, meaning be authentic, be yourself. We're going to be ourselves. You as an investor, be yourself. If you don't know something, put your hand up, say, I don't know this, because you're not going to be embarrassed. You're actually not going to lose money and be richer because you put up your hand. Because our job specifically, with no ego whatsoever, is to help you. We learn every day along with you. New problems, new traps, new dangers. Every day we get taught lessons. No deal is ever the same. So you being a full-time painter and looking to become an investor, you don't have the exposure we do to the market on a daily basis. So we are your guides. We want to be your advisor. Michael is your coach. His organization will coach you full-time, meaning here is your course. Learn. Once you know things, you know things. It changes you. It liberates you.
Michael, can you?
Exciting stuff, man.
So Michael, can you, again, guys, go to keyspire.com/REC, download this startup kit right now. Don't waste any time, because then Saturday at 4:00 happens and a friend comes over and then you forget to do it. So I know exactly how that happens. Go to keyspire.com/REC. Michael, can you give like 2 to 3 minutes on the organization that is Keyspire? And because I know there's people that are in our community that haven't necessarily even maybe went to a website of yours or like even come to a workshop. Like now in 2022, how are you guys set up? How do people like actually get in touch with you guys?
Yeah, it's a great question. I'm actually seeing the question a lot in the chat of where do I get more tools like this? How does this work? So I brought this tool here as a gift because I wanted your insiders to have it. And by the way, I ask anyone, if you do enjoy this tool, please share it. You know, share the website so they can download it. And along with the tool, you also get the opportunity to be part of our weekly email tactic list. So every week we're going to send you 2 additional tactics for the whole entire year. So if you do like this tool, share the link /REC with your friends and family. Let's spread the love and give people what they need to be successful. At Keyspire, very simply, we do real estate investor coaching. Our purpose, our passion is to put people in control of their own future. That's what we do. The way we know how to do that is with real estate investing, and we coach people to get to their lifestyle freedom day in real estate investing. So that's as complicated as it is. That's what we do at Keyspire. We have a few different ways that people get involved. We've got a free masterclass that my business partner, Scott McGilvery, does. You guys may have, some of you may have heard of him. I think everyone's heard of him at this point. So Scott does a free masterclass for everyone. You'll find that on the website too. We do a 3-day workshop. It's $300. It's 3 days. It's worth $30,000. It's 100% money back guarantee. So we do that. That's a lot of fun. We do that every 3 weeks in Canada and every 3 weeks in the US. And then we have our coaching program. Those are customized. Those are, we build something for somebody, and the investment is whatever somebody wants to get out of it. So we just build like doing a custom renovation, right? It's like, what do you want in your coaching program? We'll build it for you, and we'll put our team together to execute for you for as long as you want.
Look, I mean, we don't have a vested interest in you joining Keyspire. So I want to make sure that I give full transparency there, but I can tell you guys that by far the education, the strategies, and the tactics that Michael, Scott, and the rest of the team, all the coaches, have actually put together currently, and how many students have come to us that we've been able to talk to throughout the years. I mean, I didn't even know the 3 days was $300. Like to invest into yourself for $300 and get a 3-day workshop. I mean, real estate investing is probably one of the best types of investments, and obviously we're a little biased. It's not the best necessarily for everyone, but the investment that you make into yourself, I think, is and will give you the highest ROI. The investment into yourself will definitely give you the highest ROI. And if that means starting off at $300 for a workshop, I strongly recommend it. Like I am on recording saying I recommend that you actually do that workshop. But the nice thing is you can get a little taste of it through the startup kit as well. Girls, anything else? Simos, you're good. All right, guys. I also want to give to everybody. Oh, go.
No. I'm more than good. I think we covered off a lot of ground today. Meaning there's so much real estate to talk about right now, from cancellations of major projects in the GTA to there's a lot of negative stuff happening in the marketplace that I believe we will maybe focus our next brunch on, because there's a lot of interpretation that needs to be done, because the news outlets paint a scene and a picture that's not objective. Rather, it's very subjective. But the facts in the real estate market are the facts. I hope everyone today uses the tools that were given to you in Michael's generosity to make great decisions. Again, do not listen to hype. Run your numbers based on your own goals and make great decisions. This is one of the best markets you can possibly operate in, where the hype and demand that was speculative is dissipated. This is time to do you, every one of you. Use the tools, make common sense decisions based on the objectives and goals of you and your family. This is the best time to make investments in real estate right now. So do it, and do it for yourself.
And really quickly, I mean, very well said, Simos. I also wanted to give you guys more resources. There's more content that you can get access to. I've been working on a new digital app where there is tons of videos, past recordings, and new recordings. I would love for you to get onto your iPhones and get onto your Androids, and in the App Store on your iPhone or the Play Store on Android. Just search the name Jazz Takar. There's a new app with all new videos and past recordings. I think you're gonna like it. But give me the good, the bad, and the ugly. I can handle the constructive criticism. I would love to get the feedback. Michael, we're gonna let you close this off today, brother. What's up? Like, do you want to leave us with one tip, one strategy? Yeah. The platform is yours, brother.
Yeah, no, thank you. Yeah, I'm taking the kids to the fair in a few minutes, so we're gonna go have a little fun at the fall fair. But I'll leave you with this final thought that I think really will get everyone far ahead in life, not only in real estate or in business, but in life. And Simeon, you said about 5 minutes ago, be yourself. It's one of our core values at Keyspire that we look for in team members. Be yourself. And it sounds a little hokey pokey, but it's true. It is a tactical be yourself. And I'm going to relate it back to the competitor to collaborator conversation and function and tactic that I have. If you are trying to be somebody else, you're never going to bring the right resource to a relationship, whether it's a personal relationship, a marriage, a partnership, or a business relationship or real estate deal. So be yourself, be honest. I'm honest when I come in and I say, look, I don't run the numbers. That's not what I do. I can do a one pager, but I need somebody that can go through the full modeling and analysis. I can do that. Here's what I do. Here's what I need you to do. So be yourself is a great way, a great final thought, a great way to end this brunch, because that will get you farther in life than than any tool or any strategy or any tactic. Be authentic, be yourself.
I mean, wow. It's so, I mean, if you look at the three people on the screen right now, I hope everyone who's watching and listening live and the recording understands the what actually happens when you're yourself. Like, there was no script today. We never ran a script on any of our videos, and some people don't like that about us. We might actually lose people. The good thing is we never know, because they never come into our world. But the second we all gave, and I think I can speak for all three of us, that the second we gave ourselves first the permission, to be ourselves, the world really just opened up, right? And people started to come into our world. And some people don't like the brashness that is Jazz and Simos and REC sometimes, and that it is what it is, and it's okay. We're not for everyone, but I hope you understand how much we want to give. It's why we bring people on like Michael, his team, and everyone else that we brought on as guests in the past as well. Please take a second to send an email to info@reccanada.com, info@reccanada.com. If you can put that on the screen really quickly as well, Nikki, because I would just like you to just let us know what other topics. Simeon alluded to a topic we might be doing next brunch. Please, you tell us what you want to hear more of. You tell us what kind of guests you want us to bring on. I mean, Michael, every time we ask for it, your name always pops up. Hence why we keep on asking you to do brunch with us. It's, I think, number 3 that you've done with us now, so we're very lucky. But to everyone who's watching and listening, please send an email to info@reccanada.com and tell us what topics you want to actually hear more of, and that's what we'll bring to you guys. I'm gonna say, everyone have an amazing, amazing weekend until in 2 weeks. So 2 Saturdays from now, Tyler will be back with an investor that's going through the process of investing into real estate. It's our real story segment, a real investor doing real estate. Love you guys, Michael. Thank you so much. Simos, love you, my brother. And to everyone else.
REC Insiders, be good, be safe, enjoy this very first weekend of September. It's going to be great. Love.
Thanks a lot, Michael. Thanks a lot, guys. Take care.
Bye.